There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Welcome, Vorians, to the Saturday Software Strategy and OpenAI Learning Weekend. We're going to have another special session on pretty revolutionary technology that can actually help you guys understand trading for the areas that you lack, right? So here's how I envision this working. This is at its very earliest stages, so this by no means is anything but just a general theory, but the federal house is abuzz with my kids and my wife, and we've been taking some time to kind of understand this. So for those of you who are not familiar with this, this went live real recently. It's been pretty much a game changer for a whole bunch of areas. I mean, this thing is so good it can actually write an essay. I asked it to write an essay on the financial crisis in 2008. It came up with 4 paragraphs. It's actually really good. The cool thing I like is it's put at least what I've asked it to in a more general term. But the website is openai.com. If you didn't know, these guys started right around 15. It's a collaboration among 6 people, including Elon Musk, Peter Thiel, and a bunch of other investors. And essentially, it's just OpenAI. It's artificial intelligence. It does all kinds of cool stuff. So if I ask it to explain the Forex market, okay, it will go through and remember, this does not have access to the internet. It has the data from the internet, and I'm not really sure how that all works, but it's not going out into the internet and just, it's almost like it's a book of encyclopedias, and it's pulling what it feels it needs to answer your question. I thought this was pretty cool. So I even asked it, like what kind of banks are involved in Forex, it's about 5 trillion a day, according to the previous question I asked it. It's explaining just sort of the basics. So, honestly, how this is applicable in anything in trading land is that you can just ask it any question you want. Like, explain to me let's see if I can stump it. Beautiful. It's crazy stuff. Look at that. Cup with handle is a chart pattern. It's commonly seen in stock markets. A bullish pattern is formed when a stock experiences a sharp drop followed by a period of consolidation, and then another sharp rise. This pattern is called a cup with handle. This looks like a cup with handle on the right side. Cup part of the pattern is formed when a stock experiences a sharp drop followed by a period of consolidation. This consolidation period is typically characterized with relatively low trading volume and a tight trading range. Stock may trade with a narrow range for several weeks or even months before starting to move higher. Handle part of the pattern is formed when it experiences sharp rise after that period of consolidation. Sharpest. Dude, this is fantastic. So, going to bore you guys all weekend about that. So I would say that if you have a question about something, obviously this will bring one question will bring up like 20 on this thing, right? That certainly could prove positive. So website is chat.openai.com. This is once you're logged in, you actually have to set up an account. I think at some point they're going to suck everybody in, and then the model of this, just like any subscription models, to get them hooked on the opium, right? At some sort of free level, and then offer more advanced capabilities for a premium-based subscription. If in fact this is the case, and it may have already been, sort of all worked out, and I'm just coming in and speculating on a Saturday morning, which is what I typically do, it could be some real value to this company. Probably already is. So it's just a matter of I don't know who, what, where, when, and how. So stay tuned on that one. I'll take a closer dive into it next week as we go into the holiday trading. Volumes are typically lighter. A great example of how a market can be manipulated with lower volumes I have up on the screen, which is the S&P 500E mini futures contract. This is the continuous forward contract on a 5-minute chart. This is as of Friday. So when we had those really, let's just say, hot PPI numbers come out on Friday morning, the market took almost a 50-point rip within 1 minute. And you can see that on this chart, the volatility that was associated with that, right? Now, this was pre-market. This is Eastern time, this chart. So is my broadcast. But I think it's an important point of why I always say, if you really have the guts and the account size and the intellect, you could tackle something like this. But more than likely, you get whipped out of your trade with a big loss and you have nothing to show for it. So oftentimes, if you're trading the S&P futures markets pre-large news release, right, which is typically at 8:30 Eastern time, you can make some money, but typically the money is made once the action finishes out, right? So in this case, we haven't been trading this low, and then we start to grind back up, and then come, just about 45-ish, 330-ish, right in here, the market just started to dump, right? Basically, nobody wanted to go into the weekend long, right? So this is also another beautiful example of when you have sort of a flash. Oftentimes I'll say, always look at the tip of the flash on both the upside and downside, right? Oftentimes, which certainly can't be said here, but most times you could say something like the following: this was an incomplete auction. More than likely, the market's going to go back down and finish the auction in that area, and it did. Why? Because more than likely in this previous, looking at yesterday's auction only, you had probably many skip prints down here, and it was incomplete, right? So if you want me to get into the science behind why human nature wants to do something like that, I could spend an hour. Maybe we could type that question into OpenAI, as we've already begun to look at it here. But the real bottom line is that they have a tendency to want to revisit the extremes of a market overreaction at some point. That's the key thing. It's difficult to teach what point, right? So that is the lesson for the day. And let's go to the markets, which we have not focused a ton on over the last 2 weeks, because we all kind of know what's going on. If you've been paying attention in my cast, isn't really any great new insight other than the PPI number coming in hot. So what's that tell us? More than likely, that number next Tuesday is going to be coming in hot, right? Could be wrong. Hope I'm wrong, because, if it were very wrong and it's very not hot, it's very cold, right? Low inflation, you're going to have the opposite folks coming out and starting to scream, now we're headed into a deflationary spiral, which is almost more difficult to get out of. If you had read my blog I wrote a few weeks back called A Dangerous Path, Dangerous Historical Path, which is on our website at First Down. Imagine this, you guys, and it's just like almost like the confusing broadcast this morning. Imagine you want to write a blog about something, right? And you're not, maybe just don't have all your information together. you could go into OpenAI and just ask it to write a blog about a particular topic with a specialization or a focus on some sub level, right? And then just see how it turns out. I may give it a shot and see if it, pick a topic, something related to trading, portfolio management, man. I may even do a topic on, which I haven't done for our clients and I need to, topic on asset protection, right? Why do we recommend to clients we set up, trusts and move certain pieces of real estate into a trust or an LLC or an INC, that kind of thing? It's all about asset protection, right? If someone comes in and tries to steal your stuff when you're old and decrepit in a home, it's protected by certain entities that oversee it, right? Could be individuals, it could be some sort of organization, right? So, and that is certainly a risk piece that we try to address estate planning, obviously, with clients. I recommend everybody always focus on the estate planning aspect, right? A great example of this is I had a buddy that, just to get off topic here, I had a buddy that, rented a house, and it was a pretty nice house. It's in Temecula, which is San Diego County, and he rented a pretty nice house, and he had like 6 buddies in the house. It's a pretty big house right in wine country, and he's a winemaker friend of mine, and 2 of them trashed the house one night with some crazy ass party, did a whole bunch of damage to the house, and then they just picked up their stuff and left, right? And he was left holding the damages. Had he had the right sublease contracts in place, he could have gone back in court, although probably be blood from a stone with these knuckleheads, but he could have gotten an injunction against them, for basically screwing up the property, which he doesn't own. So many plays where asset protection and protecting yourself, I should say, will play out. So let's go into the charts. This S&P 500 daily chart. Each day represents a single candle. Red up, in a sense. Red down, green up. Maybe I'm still asleep too. But looking at the overall marketplace, as we were squawking a few days ago, we were telling almost everybody, including my podcast at the time, take some off the table if you're really heavy in equities, or you just don't have the stomach for another big dip, because we're probably going to see one. How fast this plays out is almost 100% inclusively dependent on what takes place next Tuesday and the rhetoric that comes from the market into that. So if you're trading on MT4, anything that involves a U.S. index, okay, US 30, whatever, right? Or you're trading the futures markets, or any of these markets, individual equities, options, stuff like that. The tone that sets Tuesday will more than likely be something that you can ride. But the big cautionary note I will make is that the tone that is set Tuesday, if it is negative, right? Markets start going down, hot inflation, it is completely and 100% counterintuitive to, or inversely correlated with, rallies that typically take place during holiday times. Why? Mostly because, and not this year, but mostly portfolio managers of all types around the world, all types of funds, usually have their year made, and they don't want to disrupt the apple cart going into the end of the year. It's almost like status quo, right? A lame duck presidency, if you will. So, but what would dramatically get them upset is a really hot number next Tuesday, because we've rallied a bunch. And basically, we're just not comfortable being long this stuff for any duration of time. Yeah, the little write-up's been fun, but now it's time to take risk off the table again. How that spills out into the Forex market, very simply, is just a rise in the dollar. It's almost perfectly inversely correlated right now. Not always historically, but it is right now. So keep that in mind as we're going through here. I do want to take a look at all charts on daily. If you've never seen this before, this is FinViz. Equity markets are at the top. Do not pay attention to the Dow, even though they have all kinds of MT4. I think it's an inefficient benchmark focused mostly on S&P. If you're a tech or biotech person, focus on NASDAQ. Small caps or Russell. European is DAX. Stocks 50, it's like the DAX, less stocks. Japan market, okay, VIX. So, interesting thing, look at energy. Almost uniformly, look at that heating oil. Heating oil is usually hovering high, right? Wintertime, that stuff. Look where gas is going. Hey, look, with the exception of OPEC and, the big energy companies, or at least shareholders will hold lots of stock in big energy companies, this is not a bad thing, right? Unless you're that group, right? Or you're all invested in energy stocks. You're hating life right now. But from the standpoint of deflation, we're seeing it in commodities, right? Copper, though, breaking the mold. Still Dr. Copper. Look at soybeans, right? Again, a lot of people are like, well, Steve, is this really an analysis of Forex? And look, all I'm trying to teach is just to understand what's going on globally. It'll have a heck of a lot better trickle-down effect to your trading, right? Don't spend a lot of time on this, right? Why is one way up, the other's way down? Is there a disruption in the market? Who knows, right? Look at lumber, tanked, coffee in the toilet. But notice Starbucks still raising their prices. But look at this. We're getting into credit. Look where the credit markets have gone. We've seen a rally, right? So what's this mean? It means mortgage rates are coming down a little bit. How much? If we look at it on a weekly chart, it smooths out a lot of the noise. You see a little rally we've been in credit, right? This is causing the dollar to reverse, or continuing to add to the reverse effect. So if you see here's credit, right? Forget about the commodities at this point, but there's a credit bond markets, right? You can even include the European bond markets, which they don't show in this chart, but they look kind of similar in how they're playing out, bonds and so forth. And then you look at the Forex market, starting with the US dollar. What's the theme been? It's been continuing to go down and hover because of the recent rise and a rather dramatic one, as you could see throughout the period. Now, in this case, I'm actually going to take it to a monthly chart. Each candle represents a single month, okay? So you can see in bond land how, even in the grand scheme of things, right? Look where bonds were. Forget about the 30, but take a look at like the 10-year and see where it was. This is a huge decline. Obviously, rates have gone up over 21 and 20 dramatically because price has fallen. But in the grand scheme of things, we're almost kind of within the range we've been to before, right? Look at the movement in currencies. The dollar had a spectacular rise through 21 and most of 22. Now it's pulled back. Notice where it's pulled back to. The long-term line that hit. It's almost a reactionary during the demic, right? The Wuhan lab-based virus we had spread. So looking at the dollar here, and then its relation to all these other currencies, you can kind of see it all plays out. So many of them look similar, even though the chart patterns are different. The bottom line right now is went up for a bunch. Doesn't mean it can go up forever, but I talk a lot about how markets can be irrational a lot longer than any trader can be solvent, right? It's truth here. Big declines, and now we've reversed. Question is, where do we go from here? And that's almost 100% dependent on the central bank's reaction to inflation. That's simple. So there are other mitigating factors that fall into the equation that don't have anywhere near the ramifications of any kind of producer or consumer price index rise or fall. So this was last week's news. Coming in hot. Okay. Next week's news. I don't really care about anything other than this right here. This is an Eastern time chart. I'm in Florida, East Coast. Those are the times. Please adjust accordingly with what your time is. But this really matters. What happens here I'm pretty sure is already, well, I should say this. I should say what happens on Wednesday, or this is always around 2 p.m. Eastern time typically, I'm pretty sure is already baked in. Okay. I'm pretty sure they know where this number is going to come in, and they may go another 50 next week. Okay. So I don't know that. I could be wrong. Honestly, I hope I'm wrong, right? I mean, the cost of capital going up affects us all, especially those like us that are in business that at some point may want to expand the business or purchase another one to merge into ours, right? We want lower cost of capital in order to be able to do that. That is not the case right now. So we're not interested in being an acquirer at this point. I don't know anything else matters next week. Look, I mean, there's a ton of red next week, and most of this is just because everybody wants to spell out the important news before the holidays, which essentially is the last 2 weeks of December, right? Past next Friday, just looking at the calendar, right? So this is pretty much it. This is the last day for school for kids in Florida, our kids, at least in the public schools. But looking at the last 2 weeks of December, I'm not going to be doing anything. So we're going to be at the beach, taking some trips here and there. So I don't know how much I'm going to be around. I'll try to put in, unless anything spectacular goes on, I'll usually post it on my Telegram channel. By the way, all last week's trading notes were posted on Telegram. If you didn't see them, go check it out. Good stuff. That was the entire event last week. So that is the news. So let's blow out of that. Let's blow out of that. Let's take a look at the markets. Those looking at S&P, daily chart again, trading view form, much more analysis based. I can't tell you where we're going to go. If that number's hot, we're probably headed somewhere down in this prior zone, which we're sitting on the top of here, 3,900. Bottom of this zone is 3,708. It's also the value area low from a market profile perspective here. See these blue lines versus the lighter blue. Heavier blue means it's shaded where all the trading volume of 70% range takes place. So you're more apt to bounce off value area lows, bounce back off value area highs for the entire window that you're looking for. And in this case, the window is the entire period that we've been in this lower range, right? You can argue that you should include this, right? And if that is in fact the case, essentially a year, somebody's like, oh, well, just include the year, there's a year. So where are we? We're right at the point of control. So the magnetism of this area is very powerful in the grand charting scheme of things, right? Right around this 39. This is where the market seems to think fair value is at this point, right? Undervalued down here, overvalued there. Also, we haven't really put any big effort towards getting past the big moving average line, the red here, which is a 200-day, okay? So, that being said, all the other analysis, in my opinion, becomes rather boring. Let's take a look at the DXY. So we kind of know what more than likely is going to happen. So, quiz question. Inflation comes in hot, 0.2 over what they expect next week at 0.08 CPI. Remember, year over year is much more important than month over month, right? Month over month doesn't set the tone as much as a long-term factoring does. So if we hit it hot, once you become a great trader, you can kind of begin to envision maybe where things are going to go, right? And if they do end up in that area, you can act accordingly, right? Maybe it's programmed into your AI, since that seems to be the hot topic these days in your algo, that, that carries a heavy weight right now. Not always, right? I still think that the best technical analysis out there is a compilation of many things, right? I don't think it's any one thing. Although, if you're going to assign weights to it, I would imagine any market profile auction market theorist like myself will assign that as the heaviest weight Why? Because very simply, it's where the most execution has been at price, right? If everybody's buying mostly at this one price, what's that tell you? That's what they think fair value is, right? But they can get caught off guard, and they can be wrong, and so can I. So as we as we have an inordinate amount of advisors that come to us that are, let's just say, green in what they do as an advisor, a lot of them want to just fish off our boat and parade, Steve and Steve around to get in meetings with, bigger clients, right? And I'm saying, that's fine, but at the end of the day, you guys got to stop fishing off our boat. You got to start building your own, right? We can help you build the boat. We're not going to put the hammers to the fiberglass or the metal or whatever, or the wood. We're going to get the team for you, right? So I would encourage you guys, it's the same challenge I'll throw down to all my students, learn this stuff. And it's not difficult. The difficulty in most traders is in their head. They can't get that inner monkey straight. They have emotional craziness, or that you watch any of those old Samsonite commercials with the ape jumping around inside the cage. It's like the single best example I've ever found to explain your brain when you're trading, right? So you can be calm, or you can be absolutely loony inside your cage, right? It's up to you. But those that can remain in that sort of Zen zone with all the other education they have, they just act like a robot, right? Maybe you build yourself your own little mental open AI structure, right? You just execute when all X things line up, right? Maybe it's an area of confluence on the charts, right? So let's move into Euro, US dollar. All right, so I think we're pretty much fair value here as well. See the red line run across the screen, point of control. So it's the center point of where all volume's taking place over this whole, a little more than a year. Is that right? A little more than a year period of time. This is probably why we're pausing here and feel to at least a little teeny range. But I would see first stop pending any rotten news next week on the inflation front. This one, which is far away, but this one spot 024-ish area, this whole 50-ish area. And then obviously the top of these two shoulders. See this head with shoulders pattern? The top of these two shoulders, about right here, right in this range. And then obviously the top of the head. It's a pretty solid point. Now we're above a lot of moving averages at this point, so momentum typically will just continue to play. And honestly, once the trend up starts, which is where we are in most of these currencies and everything that's in the majors against US dollar, with the exception of the US dollar moving up, they're going to continue to move up until they don't, right? And they typically will stop at big points and reverse. That's kind of where we are right now. Those are the levels I would see. GBP. So if we're looking at the same time frame here, daily chart, each candle's a day. It's the same center point. See that? Analysis plays out the same. Although the top of this range, I would assume, would be this air gapped area here in 127.82 all the way down to the bottom of this zone, which you can actually see fairly well diagrammed, 118.31. If we get extreme out. So oftentimes, and it isn't necessarily looking at this chart, but after you're finished looking at a lot of charts, you want to ask yourself, if I was to form a thesis, right? If your trading teacher had you stand up in front of the class after you learned all this stuff and he or she asked you to put your trading thesis together, right? What would it look like? Short term, midterm, long term, right? Very short term, whatever the particular terms you're looking at trading, your thesis you want to begin to build once you've done this. And I'm essentially try and build a thesis, right? The problem is when everything is absolutely completely data dependent on one or two factors, inflation, it's hard to build a thesis of any measurable. But what you can do is build a ranges like you see I do a lot. What could the extreme outs be, right? Everything melts down in the world. I would imagine we visit this point again. Sounds crazy, doesn't it? We have not had a complete auction down here. Yes, it's far away. Yes, this probably would clobber a few banks and trading funds along the way, but we haven't completed this auction. Look at all these missing notches down here, right? Doesn't mean we need to complete it soon. In the financial crisis, we had many of these lows that were not properly auctioned around take a year or two to play out. Eventually, they came back down and they completed the auction, right? They came in and whoever supported it, which was probably the U.S. government via trading futures back then with the plunge protection team, but whoever came in to hold a zone, right, or groups of other time frame players that came in to hold a zone, they did, and then eventually moved higher. But for now, it's an incomplete auction. I don't really know I'm going to get into too many other currencies. Let's just take a look at dollar-Canadian relationship. Dollar-Jap, actually daily, yes, daily. Dollar-Swiss. Canadian, Japanese yen. If I'm seeing anything whack, like this one, by the way, this thing's really been whack. I don't trade this, but this is one of those ones you just really can't get a feel on stuff. Gotta go out to a weekly and reset here. I mean, just dislocation city, I'll tell you. But the euro has just been climbing back into the zone. Perplexed as to why, with countermeasures and reinsurgent attacks in Ukraine, I just don't see. And the commodity folks would tell me that this is a natural resource-based rally. Maybe they're right. Euro GBP back in the big zone. Those were weekly still. Just taking a look at long-term stuff. Zone. GBP CAD. Let's drop back to daily so we analyze this a little bit more. For those that did not know, by the way, NEO has been removed from the algo list of Auvoria. They are going to be recoding the software, and I assume, although I don't know when, returning to the marketplace once it's re-optimized. But as is a smart move, I don't think it's wise to keep something in the marketplace and have it blow out accounts if it needs to be reworked. So they decided on as a dual relationship. So for now, I'm not going to spend as much time in here. Big climb. Everything but the Canadian dollar, man. It's crazy. All right, so let's look at spot gold. We haven't looked at that in a while. I want to just show you guys we're coming back up to the center line of the whole last year's trading. So just another example of why the magnetism of a center point is very powerful. Oil. I always like it when oil goes down because, look, I mean, I get it. There's a lot of people that own energy stocks and all this, but it's probably just some little victory lap I want to take against OPEC, right? It's more of just like a face type move, Let them sweat it out over there. What else? Take a look at crypto. The deadness continues. It's almost like the Dead Sea. You should have to drop the weekly to get any life in trying to see a chart. Each of these candles is a week, right? You could even expand this all the way out to the top of the screen. You're still not seeing anything going on. I mean, crypto is just, the thing that has me shocked, and look, people are looking at other things in crypto other than where the price of Bitcoin is. But the fact that we haven't cratered out at this point, down to a much lower level, which arguably is the sub 12,000, right? Keep in mind that point of control is still down there. Nothing's changed. It's still running around 10. I was going to expect just one waterfall back down to 10, right? This is not a bullish chart, guys, okay? This has been a bearish chart since we were squawking about this at the highs last year, much to the chagrin of many people that disagreed with what I said. And that includes almost every crypto follower of mine on Twitter, right? Steve, you're wrong. Yeah. I'm just like, look, here's the way I see it. It's always going to be the case with me. If you are an individual anywhere on this planet that has an inordinate amount of your wealth at this crypto, at this point, you need to take some off the table. If you don't understand the core principles of investing and risk management, and I have no sympathy for you if your net worth evaporates. And a huge chunk, if not almost all, of many of those hold on for dear lifers, your entire wealth is evaporated, right? That, folks, is not risk management. It's poor investing. So if we were to see, God forbid, this drop even further, I'm pretty sure it's going to wipe out crypto for years to come. I just wouldn't be an investor. There's just been too much crap, as I've talked about, hit, right? Imagine this. Imagine if you're a stock investor. So I use this as an example, which I think is a pretty accurate comparison. Imagine you're a stock investor and you've been, let's say it's, I don't know, when was there all kinds of fraud? Like 1991. Okay, you've been buying the markets ever since the crash of '87. This is in the S&P, and they've had a pretty good return. We went through a rough patch in this country, right, in '91 as far as recession, and currency markets were kind of crazy at the time. But let's say you were running stocks all the way up and down, and then all of a sudden they came out that Charles Schwab, Fidelity, Interactive Brokers, and Ameritrade, the stability of their trading platforms where all your money was starting to get called into question. And then TD Ameritrade was the first domino to fall, right? And you're thinking, oh God, I've got all my investments in, let's just say a 401ks which were starting to hit some pretty good popularity at that time. All your investments are in equities, right? One of the brokerage firms goes down with fraud. And then there's a couple others are starting to teeter, right? Now, in this particular example, from a regulation standpoint, it's not an accurate comparison because there is no regulation in crypto exchanges, right? It's all DeFi. We can regulate ourselves. Yeah, that didn't play out, right? Where it was regulated here, right? So from that respect, it's not an accurate comparison, but it's just from an emotional and risk management feel, right? You'd be flipped out, right? And then imagine if somebody said, well, forget about these brokerage firms. I'm just going to take my stock certs out of the account, which you could do, right? They'll send me my 200 shares of Intel, right? Just totally starting to kill it back in '91. I'll send me my 200 shares of Intel. And I don't trust these brokerage firms. I'm just going to hold them myself, which is the same thing as holding it in cold storage, right? For crypto. Now, you're beginning to have some of the exchanges, like stock transfer companies, get weak and teeter around. And then you're thinking, oh, well, geez, I got all these investments. if I can't put it back into a liquid stock transfer agent and then get it into a brokerage account to trade it, it's not worth anything. Yep. That's exactly how it feels right now. So, I would say, if that in fact is the case and you guys get a ton of money sitting out in cold storage right now, I would convert some of it back to US dollars. I really would. Or whatever your country's currency is. Some real regular fiat currency, right? Seems like a bad thing among some of these groups, but yet, nothing's happened to it in over, at least the US dollar, 200 years, right? Yes, it lost the gold standard. I get it in the early 70s, but outside of Brentwood event, it still has value. So it may not be backed by gold, but I don't know if there's enough gold on the planet to back all the currency floating around, obviously. So that's one of the reasons they they dehooked it up. Is that even a word? A word of the day? They dehooked it up. They unhooked it. So that is the broadcast for the weekend. I don't have anything more to say. I wish everybody a continued holiday season. May the holiday season cheer overcome. I don't know what rhymes with that. I would just say have a great trading week, and I'll see you guys on Tuesday. May the trades be with you.